So staging labs came out of a personal loss, a personal experience, actually in this very room that I'm recording this in. I signed a transaction and lost $10,000 for my wallets in minutes. And I remember slamming my hand on this very floor. Immediately after, I just felt stupid. I felt embarrassed. I felt, like an idiot. I think Rob mentioned this in one of your other interviews, like focus on problems that are resilient to market cycles. Like I heard of one story where someone lost over $100,000 and then got scammed by recovery services and lost even more money and completely lost control and had to sign over power of attorney to his partner. So what we did is like a demo of like a prototype, ran people through it, and then asked for a prepayment. So I think like that's like a masterclass in trying to get willingness to pay.
That's product market fit.
Product market fit.
Product market fit.
I called it the product market fit question.
Product market fit.
Product market fit.
Product market fit.
Product market fit.
I mean, the name of the show is Product Market Fit.
Do you think the Product Market Fit show has product market fit? Because if you do, then there's something you just have to do. You have to take out your phone. You have to leave the show 5 stars. It lets us reach more founders and it lets us get better guests. Thank you. Frankie, welcome to the show, man.
Thanks for having me.
So, I mean, we've done a few of these now and I like it. I'm glad that we're doing this. We started by just doing hyper successful founders and then we go, how do they get started? And we're still obviously doing that, but we're now putting in some of these stories, again, like mine, like Gym Track, where things didn't really work out. And in your case, I mean, you raised over $1 million, you had 10,000 plus like on a wait list, you had hundreds of paying users, and still like ultimately it failed, right? It didn't end up working, at least in terms of like the vision that you had. You did find a home for it, which is actually a big deal. We'll get to that. But it didn't work out in the big way that you'd hoped. And it's just crazy. Like sometimes like the difference between something that works and something that doesn't is actually like not nearly as much as you might think. Like when you hear the big stories of Uber or whatever, like it just seems like everything just kind of worked. But oftentimes like you're going through it, you're like, everything's kind of working. And then the other scenario is not necessarily like
There's
an Uber.
a bunch of people doing 90% of the same things and don't get there, right?
Exactly. So it's pretty crazy, man. So anyways, we'll go through it. Maybe let's start at the beginning, right? Like what was Staging Labs? Like what was the idea? Where did the idea come from?
So Staging Labs came out of a personal loss, a personal experience, actually in this very room that I'm recording this in. I signed a transaction and lost $10,000 for my wallets in minutes. And I remember slamming my hand on this very floor. When I told the story during the founding journey, it gave me a bit of PTSD, but I moved on from it now. So it feels, a bit more nostalgic than in the moment.
But basically you bought a token, like you bought some token or something like that?
No, my co-founder sent me this project. So I'm not throwing him under the bus, but he sent me this project. So my guard was down. But that website had been hacked. Like it was a website that had a phishing link, and so it pointed to a different Discord server. And I signed transactions I shouldn't have signed, but my guard was down. So I made the mistake, but I think it's so easy for someone to make that mistake. Immediately after, I just felt stupid. I felt embarrassed. I felt, like an idiot. Like it's a very emotional reaction. If you've ever been scammed, you feel like the victim. It's
not like it goes beyond. I mean, it was $10K, so it was a decent amount of money, but it goes beyond just like losing the money. It was more just like you feel like an idiot for having lost the money.
Right? And it's not a position that you're typically thrown. I joked with my co-founder, Jake, that I wish I had like some sort of panic button or I wish I was able to freeze my credit card, coming from a world of typical finance. And he came out, a few hours later saying that I can build it. And I called bullshit. I was like, there's no way. If this existed, it could have been done. It would have been done already, right?
Because isn't that the whole point of like blockchain? It's like it's not supposed to be reversible.
Yeah, exactly, right? As in like that's counter how blockchain works, right? But there's actually loopholes in it, as many, products are built out of those loopholes or, just ways around things. But I tested it, right? I probed every single, I came from a VC background. I knew how to poke holes. I spent a month trying to figure out why this wouldn't be possible. And the more I poked, the more people I spoke to, the more I realized he was onto something. And so then I went on the other side to validate, okay, like, am I the only one dumb enough to get this? Like, I know some people are posting about, getting scammed, but like, it's not like a common thing that you read about. And so I spoke to 100 people. And funny enough, like usually in the first little bit, people are just not usually very open to like admitting that they've been screwed. But as soon as I told my story, I was vulnerable and I shared my side of the story, they opened up. And I think out of the 100 people I spoke to, 30% had scams happen to themselves, and 50% knew of someone that had been scammed in their personal circles, right? And so it's like a rampant problem. And some of the stories were horrible. Like I heard of one story where someone lost over $100,000 and then got scammed by recovery services and lost even more money and completely lost control and had to sign over power of attorney to his partner. And so it's just like mine is a small scale, but it could really devastate lives. If you've read up on like pig butchering scams, romance scams, like it goes way worse than what I experienced. But it felt like a problem that like, was top of mind, something that really was personally relevant to me because, as a victim myself, and had a significant magnitude in impact. Like I just thought of like the 10 closest people to me, if they were to dive into crypto, just like 3 of them will get screwed, and there's nothing I can do about that. So we went out to solve that problem.
Maybe just context, like, were you working full time at that point, or had you already decided like you want to start something and then this happened?
Yes. Okay. Good context. So my co-founder and I met through Entrepreneur First. I used to be the general manager there, and I ran the program. He was a core member I recruited into the program and immediately knew I wanted to work with him, but it's a bit of a complex.
Because normally, just for like the way it typically works is you get a bunch of great like founder types together, they come up with ideas, they build stuff. That's like how the incubator, accelerator, whatever you want to call Entrepreneur First, but that's kind of how it works, right?
Yeah, and I ran. So you pair up co-founders, they stress test the founding teams, and if there's a strong founding team with a strong premise, we then double down on a pre-seed bet. But I ran the program, so I couldn't just work with him. That's a conflict of interest. But he unfortunately for me, did not find his co-founder on the program. And so I left EF. I had spent 4 years there, and it was the best part of my career like at that point. But 4 years of anything, you'll plateau eventually. I wanted to take a bigger bet. I also felt like a bit of a fraud or imposter, pitching people that like, if you're ambitious, you should start a company. And here I am sitting like, from a high horse positions, not starting a company, being like, wow, like what a hypocrite, right? And so I knew I wanted to take the bet. I had built companies earlier on as a teenager. We can go into that, but none of them took off. And so him and I decided to bootstrap. We knew we wanted to take our time to figure out a real problem instead of being rushed within a program. And I think it's quite difficult to separate the two hats. If you're running a program and trying to go through it yourself, it's very hard to really go through it. It's more theoretical.
So you kind of rip the Band-Aid off. You're like, I want to do this. I'm going to do this. This is the person I want to do it with. Boom, I'm out. Let's go.
Yeah. And we spent 6 months in validating a bunch of different problem spaces. And then the problem of crypto scams happened because I got scammed. So it was purely based out of like my own experience of experiencing the problem.
And so you start diving into this, like you speak, you're doing the right things. And obviously coming from the world of EF and seeing so many companies be built, and I'm sure like reading up on, the different ways you should do it, like you had that playbook pretty down pat. And so you talk to 100 people, you realize this is a real problem. What's the next step?
Yep. So we've validated that there is willingness to pay. People were willing. So what we did is like a demo of like a prototype, ran people through it, and then asked for a prepayment. So I think like that's like a masterclass in trying to get willingness to pay. So I think we did that right. The nuance is that we didn't necessarily continuously validate it over time, and then context changed. But just for story purposes, like we validated the willingness to pay, was able to generate revenue based on nothing.
This is direct to consumer, and how did it work? Like you bought this it was almost like an insurance type product, or how did it function?
Yeah. So think of like guardrails that your typical bank account has, like a transfer limit, like you can't transfer more than $5,000, $10,000 a day. We enabled any self-custody wallet to be able to set their own guardrails. So you don't want to so if a transfer triggered more than $1,000 in 24 hours, move everything away. So you max your loss, like a stop loss kind of thing. And it was a subscription product that people paid for. And so we didn't have a product. It was just like a demo, but we generated revenue just from pre-sales because and timing, just for context, this is like March, April 22. So still in the bull market, not
right at the tail end.
Luna. Yeah. Right. So this is like, just again, context for timing, right?
What were you charging, and how many users did you get to like pre-buy, more or less?
So at that point, just a few dozen, just enough to get confidence, and enough strangers that like it wasn't just based on me. We were just charging like a very arbitrary amount at the time, like $10 a month, $100 a year, like just B2C product, right? Like you just got to test and see what people are willing to pay. But we had the signals and we had the demo, and so we go out and fundraise. We did a decent job of like playing the game of not saying that we're pitching and just meet with VCs and angels to build relationships. And out of the first 30 conversations, 2 of them preemptively on their side said, like, whenever you're ready, like, I'm in for this amount without me asking them for money. And that signaled to me that like we were ready to go. So before we even went out to fundraise, like a good quarter, almost a third of the round was already filled. Had I done it again, I would have waited till half. Actually, I think like depending on the team, not everyone's able to pull this off. But like a third to a half of the round took like a month versus the half to the 100 took like a week, just because FOMO kicked in and everything ran from there. So I think it would have been just easier had we just waited a bit longer. But we went on to raise. We had over 2 million in commitments, so we took a lot less than we could have taken. We took a 1.1. We were actually going to stick to 1, but then a few strategic angels came in that we really wanted on the cap table.
And what was the reasoning for that, for not just taking the 2?
My co-founder and I know that we don't need the money for ourselves, for our team. It's really to hire. And we knew that a certain number of hires could get us to where we needed to go just because of my co-founder's strength on the tech side. So like we didn't need much to prove. We'd rather have flexibility, dilute less, and then go on for further raise. But that has pros and cons, right? I think we managed our money well enough to have optionality throughout. But had we burned it a bit earlier, I think we would have been forced to make a certain decision earlier than prompted. It was really, I think there's no right answer there. I think it came from a values perspective of like how my co-founder wanted to run the company, who we are as people, and we wanted to be frugal. But there's a very easy like flip side where we could have gone out to raise 2-3 million to have many swings, and just have more runway. So
but your plan was to kind of keep like, where did you keep the team at through that kind of year after?
5 total. At the peak, we're able to hire a fully Canadian team, so we paid less than if we were to hire, US, and took advantage of Shred and all that, of course.
I mean, it's crazy, man. Like, you're doing all the things right. I'm like, when does this thing start to, when does the punches start happening?
From a VC to founder perspective, you've seen enough rodeos to know what not to do. But I think like the real talk is just like the 90% almost doesn't matter. It's like the bottom, like the last 10% is what matters. You could do everything right and still get screwed. It's like, how do you do the last bit? And that's like, you cannot teach that to someone. Like it's not a framework. It's not, a repeatable path.
Is it luck?
It's luck, timing, and just speed of learning. I think, yeah. I think like if we had learned some of the lessons faster, we would have probably made it.
So it's not pure, like, pure luck is there's nothing you can do about it.
No. I don't think it's, no, I don't think, yeah. I mean, like, it's not to say that like anyone who's fast and is, is able to win. It's just that you decrease like the probability of failure significantly if you just learn faster. And I think we were slow on some certain things we could talk about.
Well, we'll get into this. I take you on a tangent.
But yeah, so that we went out to raise, got on TechCrunch, like did everything that you would expect of a pre-seed startup. But I think part of it is like I was doing it as like a checkbox exercise as opposed and like trying to do everything right as opposed to like just doing the one thing that's right. And I think that comes from like a VC perspective of like throwing frameworks as opposed to pure executing. It took me quite a while to like shift. And we could talk about like the shifts later. But we went out to raise, closed the round, built the product. And by the time we launched, one key piece of context here is we were tying up our launch with MetaMask Snaps, which is one of the largest crypto wallets in existence. And they were launching a marketplace, and we were partnered up as one of the partners on the marketplace, but they delayed their launch significantly. And we relied way too much because I knew that like in a B2C crypto play, it was either partnerships or community. And one of the mistakes we made is not invest enough in the community. We didn't have a strong enough community to build our initial product to get it to venture scale. And so we went with the partnerships approach, but that made us super dependent on them. And the fact that they delayed it multiple times just means that we entirely missed the window. So by the time we went out to market, so we raised in late 22, like right after Terra, but before FTX. So like in between two shit shows, like just the viable amount of time needed. Because had we been like a few
post
weeks,
FTX, it's over. There's no way.
Yeah, like good luck then, right? So we were very lucky there. That's pure luck. I didn't plan that. But we only went to market. We were supposed to go to market sometime in March, but we only went to market in September. Not anything due to our own execution, because of our reliance on partners. So we should have launched elsewhere and gone with.
You're saying, when you say go to market, you're not talking about financing. You're talking about like launching the product.
No, launching the product itself.
You raised like in late 22, but you didn't launch until fall 23. What are you spending your time on in that like nearly a year or whatever, 9-month period.
Yeah, so we were building out partnerships and getting our channels ready to go, as opposed to having continuously validated the willingness to pay. Had I done that period again, I would have focused more so on who is willing to pay. And in a nutshell, we chose a target customer, which I will brand as like Web 2.5. So someone who's not necessarily full-time into crypto, has a large amount of disposable income, has more than 10K in crypto assets, but understands the value of security, understands the value of a VPN, pays for VPN. Like that persona in early 22 would be and did pay for our product. But that persona in 23 ran away from crypto. Like they weren't transacting at all. They had like they were hodling, yeah, but like not doing anything with it, right? And so how do you convince someone to pay for something if they're not opening up their wallet, period? Like it's like a dead end, no go.
But did you stop talking, like, because you had a wait list, right? Like what did that look like? Or did you just stop talking to customers in 2023 altogether?
No, we talked to customers in terms of like figuring out like what is the best UX for the flow, but we didn't revisit willingness to pay. I think then, and that was just the assumption.
In
so we
your
had
mind,
like a core...
it had been checked off. You're like, there are people I know because I did the exercise, so we're good.
Correct. Right. And then when we went to market later on, we're like, oh shit, like this is not planning. So then we pivoted our focus towards degens, but then degens in a bear market is a very different.
And degens for the non super crypto crowd as well, like the people that are just like all in, right?
People are just all in who typically don't even show their real identity. They're very greed oriented. It's just, how do I make the most amount of money? They don't care about safety. They believe they're going to live forever. They're not going to necessarily be willing to pay for security. And this is not just us. There's a bunch of security startups in the crypto space that also have to pivot out of that user group.
The other question I have is like, through 2023, you're waiting for this partnership, but why not just launch it for whoever's there and willing to pay in your wait list?
We did. And that's so, but we found that there was a lack of willingness to pay. We're adapting as we're also getting ready for a partnership launch with MetaMask, which is kind of like, we knew we were heading into like a path where like the product market fit isn't there. We're already committed. They put in significant capital to like launch with us. And so like we were kind of stuck into like this place of like, okay, like again, I think like founder optimism, you assume that 40 million active users, a certain amount will convert and whatnot.
But I'm curious to get the details because I think that's critical. So September is MetaMask. When do you launch kind of publicly?
Private. So
yeah,
private. We launched in like May.
Okay, so you're taking in users off your wait list. That's the private?
Yes.
Okay.
In May, just trying to get ready for it. Like we have an alpha, beta. We ran it through like hundreds of iterations, but we focus primarily on usability, on like how to, and again, like crypto is so nascent, or like there's so many problems we have to solve in terms of like, how does payment work? How do you set up, like what types of wallets do you want to go into? What network start are you going to choose? Like it's so fragmented that just figuring out that takes like months, right? In terms of building it. And so what we should have done is test for willingness to pay throughout, as well as the user experience side of things. I think we were so hyper-focused on just making a seamless, simple product that we forgot to ask if people would pay for this simple product.
So I get that. But then, so when you start letting people in May, do you ask them to pay and then you start to see they won't? Or
No.
what are the
So
insights?
like these are people already on the wait list. We're not testing out for willingness to pay immediately. We were trying to test for like the flows. We tested for like willingness to pay again closer to like June, July. And that's when we realized like, no, people are not willing to pay here. Like people were willing to pay on the spot, on the call back when I did it in validation mode. Here, people were coming up with excuses saying like, oh, I'll think about it. And the desire, the urgency wasn't there. So I think we had a high impact problem, but not an urgent problem. It's similar to like insurance, similar to other security products where like you're basically promising a loss prevention in the future. So you're abstracting the problem away from the future and bringing it to today. And that's a hard thing to do.
You need that. Insurance is a weird thing. So we have a company, for example, in our portfolio called Rewind, and they're like, backups for SaaS apps, right? So they started with Shopify, still kind of the big place, but like turns out, if you build a Shopify store and you either get hacked or one of your employees does something malicious or just some accident and you like delete all your products, for example, there's not necessarily a way to back it, like to just undo that within Shopify. And so Rewind is a system you pay, X dollars per month, and there's always a backup there waiting in case something bad happens. But it's very much an insurance play because you go to somebody outbound and you're like, hey, like, here's a disaster scenario. You don't want that. So like paying $10 a month, like, sure, maybe. I don't know. I think you need to have, you need to have events like, and I think when there was all these scams happening, if it's in the news, people are seeing it, they get concerned, they want to make sure they insure against it. If it happened to them or somebody near to them, that's also a reason. But if you're not having that, then the urgency is usually kind of gone.
Yeah. And I think scams has this weird psychological perspective where like people think they're better than others and it won't happen to them. Especially for like the crypto native crowd. I think had we focused primarily on the Web 2.5 crowd and they were active, they would feel that. They would see the scams and be like, oh shit, I should probably do something about this. The crypto degens would just think like, no, that won't happen to me. And if it is, this is the worst part of it. People who got scammed in crypto native personas use scams as a badge of honor. As like, this is my right to stay in this space. I can lose 10K and I'm good, and it's like that culture instead of just like, what the fuck is this, like, and so that's elitist one, but also too, like, just like so nasty and awful for the overall ecosystem. Like if like that's part of the ritual of rite of growing up for
the rite of passage, you lose 10K. It doesn't really inspire trust amongst like the masses,
No, and that's the accepted that's the accepted path at that time, right? Which is like not what I really wanted to align with, which is part of the reason why we pivoted from it, because I just wasn't feeling like my personal values were aligned with the people I was trying to serve. I just didn't like, yes, I had empathy for them in terms of like who they are and what they wanted to do, but it's just like, I didn't want to build for them. And I think like if you're a founder who doesn't want to build for your customer, and VCs will never tell you this, it's a very hard road to climb, because like if you don't care about the person you're trying to spend like 80 hours a week with, like good luck to you.
Yeah, no way. You've got to get so obsessed with the minutia of the people that you're serving in a way that is just it's laughable. Like there was somebody, I was talking to somebody doing something with like computer vision around roofs. I don't really remember. And these guys are walking around looking at the roofs, the different types of roof. You know what I mean? Like that's what you got to care about.
You have to be
it's
obsessed,
just like you have to be obsessed about these little things that nobody else paying attention to. So September, you have this launch. I understand why you would wait for it. I would have done the same thing. You're only a few months away, 40 million users. What happens?
We converted some of the people we thought we would convert, but then didn't convert more from there. So we had hundreds of paying users. So it was going well the first few weeks. But
they pushed it to 40 million and you got a few hundred, or was it kind of tiered out?
So this is like a bit tricky to share, but like what was meant to be like a big push on their end ended up being a very beta thing. So they made it like very like under wraps and really pushed out to a small group of, which is the right thing to do. But like we had like, I think 1,000 visits over the first few weeks, which is really not, it was a decent conversion, but like to paid, but not great in terms of top of funnel. Like it was nowhere near what we thought was made available.
What do you think about, like, I always worry about partnerships, lopsided partnerships in those early days for this reason exactly, which is like, they're a lot of work, take a lot of time to get all this sort of stuff. But on top of all of that, you have so little power that it's a little bit of like an exercise in hope that a partner that's 100, 1,000, 10,000 times your size is really going to drive all that traffic to you. And more often than not, what you just said is what tends to happen, because from that point of view, they're like, well, why would I push your product? Like if you have demand and you have a hot product, I'll partner with you, like for sure. But if you don't have it yet and you want me to push it, thank you very much. Like I'll see you in a year or two.
I mean, the way we were trying to circumvent that is to do a rev share, and that's what we were pitching them, but they didn't have the infrastructure to do it. So like we could have done it like behind the scenes, but like the goal was basically for every customer that comes on, we give them a cut. For context, their product doesn't MetaMask doesn't generate revenue as MetaMask. It generates revenue through swaps and changing from one token to another. They take a cut, like affiliate fees, essentially. So they didn't have like a pro tier, and they were thinking of this, but this is like very early thinking. A bunch of other people tried pro tiers in other wallets. None of them worked out. I think willingness to pay from the consumer B2C crowd is just a really tough thing to crack today. Doesn't mean that it won't change, but or last year. But I agree. I think like partnership risk is super hairy, and I think we wanted it as a Hail Mary in terms of like figuring out a channel that would work, and we thought that doing a rev share would incentivize them enough to do so because it could be significant revenue for them. But it just didn't turn out that way, and we should have de-risked by testing out different channels and pivoting out of that space altogether, which we did in the end. but we did that too late.
Yeah, so I'm curious on that. So once you realize this thing's not working, like how quickly do you start to pivot?
Yep. So like September we launched. I think in January is very clear that this is not working. We had gotten a few bites early on in the validation process that instead of using this for security, that compliance was something that people would care for. And this is not from our pushing. It's just being pulled into conversations with 3 targets in general. So blockchain analytics companies. So there's a bunch of like Chainalysis, TRM, Elliptic are the big 3. Financial institutions, so large banks, and then exchanges. And why they cared about this was less so about being a scam, because in a world of like a financial institution, all the assets are like already figured out. You're not exposing yourself to the outside world. What they were worried about is exposure to sanctions or illicit assets, meaning a wallet that belongs to North Korea that is sending money to your wallet. You have to declare it and according to SAB 121, which is an article that was coming into play, that they needed to hold the exact same amount on their balance sheet to counterbalance that asset. And so that becomes a very expensive problem to have. And so we were being pulled into conversations, and we found that instead of protecting wallets from scams, we could protect wallets from exposure to illicit activity. And so that's where we had conversations. We pivoted. We did a very thorough like discovery process and nailed down those 3 value propositions. But then we ran into a different problem, which is markets, even though there's willingness to start design partnerships and eventually willingness to pay, very slow cycles, small markets to start. And we were in this middle ground of like, we had enough runway to like maybe pull off 1 pilot or 2. We didn't have the numbers.
How much runway did you have?
18 months in as of March. We had pared down and we were frugal throughout. So,
I mean, that's actually a lot of runway.
Yeah. So we had enough, but like pilots, just understanding like, and like we're talking like big New York banks, like each one is going to take, just to get to anywhere, it's like a year. And just understanding that from like having been on the VC side. And the market that we were super targeted for was New York regulated banks, which as a whole has like 50. Each like ticket size for what we were doing would be in the low 6 figures. So call it like 100, 200K AR per deal. That's too small of a market to like go out and raise another round. So we got into this position where like we can build a very good business for people we care about, for an industry we believe in, for values we believe in, but that's going to take us a ton of time, runs it into like closely to the end of runway, and market is too small to raise again. So that if we're doing this, we're consciously going into like lifestyle business territory. And my co-founder and I had lots of conversations together. We did like start those conversations, and a lot of them turned into potential acquisition conversations as well. And so that's how we built up our early interest of getting acquired. But it wasn't an easy call. There's so many ways that could have gone.
So you decided against it, and you decided to sell the company?
Well, we tried it.
Objectively?
Yeah,
okay.
We tried it. And then I remember being at ETH Denver with my co-founder in March and saying like, this is like lifestyle business, wind down or try to sell this thing. And we gave ourselves like if we don't see this level of like conviction from our potential like partners, then we close, or we go with like options B or C. And we didn't see the urgency primarily. So the reason why the urgency wasn't there is SAB 121, the article got flip-flopped. Like it was nulled in the end. So our reason for being was contingent on a compliance article that didn't come to fruition. So it effectively killed the hypothesis there for us. But could have easily gone the other way.
You ended up selling the company and returning money to investors, which is actually very, in my personal experience, even like very, very hard to do. It's one thing to get your company bought. You know, they say companies get bought, not sold, right? Like that adage. So it's one thing if your company's working, people will buy it. But when things aren't working, especially this early on, how would you even go about that process?
Yeah, I mean, the selling conversations were not outright selling conversations at first. They were potentially strategic investment or just partnership with those companies. And I think one of the lessons we learned, which I knew was true, but I didn't realize how true it is as soon as you are like, you have any hint that you're saying that you're selling, word gets around really quickly. And we ended up finding out from other people that they knew we were selling, even though we never talked to them, which is kind of, a bit alarming. So we were very careful to like not say that we were selling and really just looking for investment or looking for partnership. but we knew what like the value proposition was for each, right? And we just needed to go out and run a process. One of the lessons I think, I don't know if it's transferable, but it's just interesting for us. Once we went out to sell, we noticed that we thought a much larger company was the right fit. And because the product was too nascent to be like directly integrated, most people are looking at us from a more of like an acqui-hire point of view. And it was interesting that larger players were less interested in the founders and more interested in the engineering team. And I knew that because I created links to see like who opened what. And so my interpretation of it is large companies are not really excited about bringing on someone that has a high chance of turnover and is just kind of come in and like disrupt shit. And they were much more excited about bringing in like a multiplier team that's worked together before versus like a younger startup. So Series A, B, where the founder saw the value of bringing on a generalist that knew that like, I'm dropping balls left, right, and center. I can bring in another founder to like really become a GM of something. This is all anecdotal, but I think it was true for us. And so we've quickly diverted away from trying to sell to like the huge companies and targeted Series A, B founders instead.
And walk me through like as specifically as you can, like the process that you use to do this, like, you know, who you go after, how you get the meeting, what you're telling them at first, because strategic investment from a Series A company, that's kind of a tough.
Yeah. So, I mean, a lot of M&A teams are not necessarily just M&A. They also do investment. So we got warm intros primarily, so we never go out cold. We got the warm intros either from our investors or someone from the industry.
And you identified people who would be like strategic to your product or just places you wanted to work? Okay.
Yeah, so products. So we targeted the financial analytics companies, which ended up being the buyer, banks, which ended up being way too big and like canned that very quickly, and then exchanges. And so the strongest strategic fit is with blockchain analytics companies because they could use our know-how to differentiate from their peers. And so that's how we went across it. But like in terms of outreach, it's getting warm intros, building out a funnel, doing calls, very much similar to like a fundraise, but instead of like looking for a few set of like winners, you're looking for one. And in the end, we had 2 offers, and we were seriously talking to maybe 4 companies in the end, out from a list like top of funnel of maybe 60.
And who ended up acquiring? Was it a Series A, B company?
Yeah, Merkle Science, that is the number 4 challenger in the blockchain analytics space, so behind TRM, Elliptic, and Chainalysis. The value was in being able to bring in our know-how to differentiate from the other 3, but also because they're a Singapore company, they wanted to expand to North America to win over customer logos in North America, and so acquiring a North American team fit their narrative. And from what I understand, they closed quite a few of the logos they wanted to close over the last 6 months.
Did the fact that you were a smaller team made it harder or easier? I could see both sides to get it acquired.
Yeah, I think it was easier for a smaller scale company because startups don't necessarily need another team of 5 to 8 engineers ready to go. Versus like a Coinbase or a Binance or whatnot, which are the conversations we had. They were looking for teams of size where they can. It's a cheap talent acquisition tactic for them, right? Compared to.
And when you went to the acquire that ended up buying, given that they're a small company, what was your story? Was it like, hey, we're for sale, or did you still go with this like strategic kind of?
No, it was strategic. Idea? We were trying to sell to them as a customer for a long time.
Okay, so you had some pre-existing relationship.
That, and we were trying to, for all of the 4, we had a pre-existing relationship. I think it's very rare that like a buyer will come out of the woodwork and make a bet on you without knowing you beforehand. Like we've known each and every single one for months or years, because they have an execution like history that they can rely on as opposed to just meeting cold.
And without getting too specific on numbers, like I'm curious more than anything on the structure of it, like cash, stock, earnout, etc., and then how much you were able to return to the investors, like 50 cents, 100%, like or whatever it was.
Yeah, so we were able to return almost 40 cents on the dollar to our investors. My co-founder and I walked away with, let's say, like a year's worth of runway. But the main thing was having the team have a home and be able to find roles for them. I think that was super important for my co-founder and I, that they were in roles that they were happy with and they continued to work together and, be able to have that narrative was more important. So we didn't walk away with a ton, but we walked away with like a freedom, which is a big thing, financial freedom for a year, which is not much in hindsight, but enough to ask some foreign questions.
No, but I said it before and I'll say it again. Like, and you go out and you say, oh, we got 40 cents on the dollar. People are like, okay. But the reality is, like, when you are facing what you're facing, which is a product that for whatever reason, like, ultimately didn't take off, getting any sort of transaction done that is not a wind down, especially when it's somewhat strategic and the team keeps going and maybe even the product keeps going, depending. But it just, like, that's a big deal. It's a big win given the circumstances, and exceptionally hard to do. Like, it's actually very hard to do.
It's very hard. It's with mixed emotions because you don't count it as a win. But I think what you do is definitely show up your fiduciary duty like really strong, and you build those relationships because as VCs, I know that I'm going to bet on someone that I believe in, and so the relationships are super important for me, and doing the right thing and showing up with my values, even though personally, financially, it wasn't necessarily the greatest home run.
Perfect. Well, let's stop it there. Maybe I'll ask just one more question, which is like, given the journey, given like everything you saw at Entrepreneur First on that side, but then the journey when you actually went into it, what's maybe the biggest lesson for you or for other founders that you have now kind of looking backwards?
And I think some of this will come off as like, you've heard it before, but there's nuance, right? So what I really want to harp down on is like validate the willingness to pay continuously and rigorously. So like, it's not the checkbox exercise of like, okay, I validate that people are willing to pay for it. Next, like, what's the next risk? Like, it's so fickle. It's ever changing. And so continuously validate that. And similarly, like, we positioned a product that not on purpose, but just was really tied towards a bull market. And I think Rob mentioned this in one of your other interviews, like focus on problems that are resilient to market cycles. Like, our compliance value proposition towards financial institutions and blockchain analytics is like important regardless of whether it's a bull or a bear, right? And so there's probably a higher willingness to pay, but there's still a willingness to pay. What we did solve was a hair on fire problem in terms of impact, but not one in terms of urgency. It's a must have, but for the future when shit goes wrong, not right now. So I would have spent more time shifting and highlighting what immediate tangible value it can bring to a user. Talk about like immediate threats that they can span from their control over their wallet, similar to what they would have with their bank account, and address like today's problems, not later on. We talked a lot about like the channel risk. So like relying on one partner is like a big no-no, something that I learned the hard way. We talked about aligning your values with your customers. So like really making sure that you obsess and feel good about obsessing, because it's going to be a really tough road if like you obsess, but like you hate yourself. Not this, I'm not saying that I hated myself, but I wasn't necessarily aligned. Like, I remember walking off on panels and doing other podcasts that were in that space and being like, who the hell was that? Like, what was that? And that felt so ick, and it hurt inside, right? And I think I'm someone who's very mission driven. I think a lot of founders are. Some founders are able to put a mask on all day and do like, fuck it, like I can do it. But I'm not one of those. And then failure to build a community for B2C products, like that's something that this is very specific to that, but something that we failed to do. Yeah. I'm sure there are others.
Oh, that's a lot, man. Well, Frankie, thanks so much for sharing your story with us, man. It's really appreciated. A lot of people,
I hope it helps.
Happy to share their wins, but not their losses. And like I said, I don't think this was a full loss by any means, but appreciate the candor. And I know these sort of stories help so many founders. So thank you.
Hope it helps, and glad to be on the show.
You remember like the first person who told you about Bitcoin, the first person who told you about Uber? You want to be that person because being first is cool. So be a cool person and tell your founder friends. Send it to them on WhatsApp, put it in a WhatsApp group, put it on a Slack channel. Let people know about the show. Let people know about this episode. Don't let somebody else beat you to the punch, and share it with your founder friends first. Remember what Ricky Bobby said. If you ain't first, you're last.